The recent downgrade of the U.S. credit rating by Moody's has sent ripples through the financial markets. And today we're diving deep into what this means for the Nasdaq 100 and the broader economy. First off, let's unpack the implications of this downgrade. When a credit rating is lowered, it signals increased risk to investors. This can lead to higher borrowing costs for the government and ultimately for consumers and businesses. As we look at the Nasdaq 100, which is heavily weighted towards tech stocks, we need to consider how rising interest rates could impact growth companies that thrive on cheap capital. Now let's talk about President Trump's plans to tackle inflation and interest rates. He's been vocal about his approach, emphasizing the need for aggressive measures to stabilize the economy. But can we really expect these strategies to yield immediate results? The reality is that inflation is a complex beast. And while lowering rates might seem like a quick fix, it could also exacerbate the debt situation. Rising Treasury yields are already a concern, and if they continue to climb, we could see a significant pullback in equity markets, particularly in tech-heavy indices like the Nasdaq. As we analyze the stock market charts, it's clear that volatility is the name of the game right now. The recent fluctuations highlight investor uncertainty, and with the debt ceiling looming, the stakes are even higher. We're seeing a tug of war between optimism and skepticism in the market. On one hand, there's a belief that innovation and growth will continue to drive the Nasdaq forward. On the other, there's a growing concern about how sustainable that growth is in an environment of rising costs and interest rates. But let's not forget the potential silver lining here. Despite the challenges, the Nasdaq 100 has historically shown resilience. Companies within this index are often at the forefront of technological advancements, and many have strong balance sheets that can weather economic storms. If we look at the long-term trends, there's a compelling case to be made for an optimistic outlook. The market may be reacting to short-term fears, but the fundamentals for many of these companies remain strong. In conclusion, while the downgrade by Moody's raises valid concerns about the U.S. economy and its impact on the Nasdaq 100, it's essential to maintain a balanced perspective. Yes, we face challenges ahead, but with innovation driving growth and strategic leadership addressing inflation, there's reason to believe that the Nasdaq can navigate these turbulent waters. The key will be to stay informed and adaptable as the situation evolves.